Good morning, afternoon, or evening, guys. All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. This is going to be your daily cryptocurrency market update vid. The date is the 11th of the 2nd, 2023. And we've got some interesting things to get into. You know, the weekend is not really a time where I like to trade. So I don't typically, unless I'm already in a trade, bother trading the weekend markets for crypto, just because I find that it's very volatile or boring. You know, it's either one or the other. It's either because you have a sort of lower participants rate in the markets, it can be quite a choppy time or a just completely non-worth it time. So typically I'll take the weekends off from trading, but stay very vigilant in terms of what I'm looking at, you know, what the price is doing during the weekend and what it's certainly doing going into what is going to be a rather dramatic week. And we're going to talk about that. Of course, the big event is the US CPI. We have the UK CPI coming straight after it. And we're going to get into it all. We're going to be doing a little bit of Fibonacci analysis on this rally and looking where maybe this pullback is going to come down to, where I'd like it to not go past in regards to a pullback. And really just chop up and reiterate a lot of what we've been saying throughout the week. You know, technically, regardless of whether we had the news from the SEC in regards to charging Kraken or not, we were looking at a pullback. Not because we're fortune tellers or anything of the sort, because technically Bitcoin looked ready to pull back. We covered all these reasons for it. We actually covered why a pullback would be healthy and actually part of continuation structure, and that it's better for us to have a pullback than for us just to keep going parabola up in this kind of a manner, because you will get a big correction off the back end of that. You know, we want these kind of baby steps out of this market, if you will, out of potentially the bear market, if you will. Now, we've always been mindful that just because we reallocated some of our cash back into the market back on the 5th of January, that we weren't necessarily allocating it saying to ourselves, this is 100% a bottom. It's never been anything that we've said or reiterated. We've said that it might be, and we're going to take a stab at it, but we're going to keep some dry powder on the side for whatever comes our way. And this is the benefit of being hedged in all directions. You know, there's a lot of people talking about overly confident bulls. Now, a lot of those overconfident bulls have been bulls the whole way down. I actually think that the bears have more confidence. You have a lot of confidence and you've missed out on a great opportunity being sat in cash. And you've missed what has been the best rally for Bitcoin since we started this bear market. And you've missed it. You know? But what I want to do, guys, I do want to get into all this. I want to get into the CPI. I want to get into everything else. Some comments from the European Central Bank, looking at rates, because, of course, inflation is going to impact that. I do have a meeting that I'm doing with my patrons tomorrow, which is the weekly meeting that we do every week. We've been doing midweek weekends meetings as well. And also, because of the sort of time or the where we are as a market, you know, I think there's a lot of touching base that needs to be done moving forwards. So anybody that's interested in joining that meeting tomorrow, link in the description to my Patreon. You can join for a month. If you don't like it, you can always cancel your membership. We've had huge growth in that department. I want to start off with this tweet from Gary Gensler. He went on to, I believe it's CNBC, to talk about what actually took place. And I want to play this because it kind of puts to bed a lot of the FUD that's surrounding it. Now, I actually believe that this is bullish. And you're going to go all in, and we've said this, we covered it when it broke, and we said, actually, there's two sides to every story. And what Gensler did was give crypto more credibility than I think most people realize. And we're going to play this clip because this really narrows down what he did and why he did it. And also reiterates the fact that he's not going after proof of stake cryptos. He's going after companies that take your crypto and offer you a return without being registered and upfront and transparent. Now, I'm not singing his praises here at all. Just saying that there's as always with the crypto markets, they're very, very emotional. Markets and investing full stop, and trading is an emotional game. And the trick is to try and not be emotional. It's why it helps to be a part of a group like the one that I've got set up. There's many others out there, I'm sure. Some of you may already being them. But they're all always drama queens, and you've got bears that have, just like, do you remember the debt ceiling? All the bears. The US is about to default. We came out and said, hang on, even though that's a possibility, right? It's a very small possibility, and you're using that narrative to try and fill your bias. In the same way, I probably use narratives to try and fill my bias. I'm not a perfect human being. I've never claimed to be one. But I always look at both sides of the coin. And even though on the face of this Gensler news was rather negative, actually there's some very positive connotations to it. And this is following a week of huge news that I've been covering, whether it be BY and Mellon saying similar things to what JP Morgan is saying, or the Fed's Waller is saying. This is from JP Morgan, sees advantages in deposit tokens over stable coins for commercial banks, commercial bank blockchains. Fed Governor Waller says crypto ecosystem has distinct parts with varying potential. So I do believe that, you know, we have to get regulated as a space to see that mass adoption. And Gensler kind of pushed that forwards a little bit. So I want to play this clip and then we'll get into all the sort of updates. I will leave timestamps for this video, guys. So if you guys want to jump around, it's entirely up to you. Let's get into the clip, guys.
Chair Gensler, it's great to see you this morning. There's a phrase online where they say, tell it to me like I'm 5. So for those who are uninitiated into what happened here, tell it to me like I'm 5. What was Kraken doing, and what was the problem that you were trying to solve?
Andrew, what Kraken was doing was asking the American public for their coins, crypto tokens, and saying, I'll give you a return, 4% to 21% returns. And the problem was they were not disclosing to the investing public the risk that the investing public was entering into. And
look at what happened with Gemini and Genesis. I'm going to keep referring people to that because that's exactly what happened with Gemini and Genesis, exactly what happened with Celsius, it's exactly what happened with all these others. I remember when Gensler came out and the SEC came out and actually banned Celsius for US customers. And I was outraged. I think we all were. And actually, in hindsight, what a bullet dodged. You know? The SEC, I think, for the most part, you know, don't serve the people, but in some cases they do.
we have a basic bargain in the United States since the 1930s. You can take whatever risks you want. Companies like Kraken can offer investment contracts and investment schemes, but they have to have full, fair, and truthful disclosure. And this puts the investors who watch your program in a better position. That's our basic bargain. They were not complying with that basic law.
So how does this, though, differ, for example, from some of the other firms out there, including...
So this is interesting what he's going to go on to, because he's going to basically bring other cryptocurrency. I'm sure you had Brian Armstrong watching this, like, you know, please, no, you know, don't bring us into the fold. But they're going to all get, if they're offering staking services, okay, as a product, then they're going to all get brought under the same jurisdiction by the SEC, and they're going to have to register. And Gensler actually goes on to say, look, all Kraken have got to do is register, and then we're good. Because then the thing is, by them registering, it's all about bringing people under their control, but there are potentially benefits to having a centralized crypto exchange being under the control of somebody that can go, well, if you mess up and you've told us that you're not going to mess up and you've signed this dotted line to say you're not going to mess up and you do, then we can screw you.
Coinbase, who offer yield products.
Whether you call it, the labels don't matter. Long ago, Supreme Court Justice Marshall said this so eloquently. It's not about the labels, it's about the underlying economics. And this really should put everyone on notice in this marketplace, whether you call it lend, whether you call it earn, whether you call it yield, whether you offer what's called an annual percentage yield, APY, that doesn't matter. If somebody's taking their tokens and transferring it to that platform, the platform controls it. And guess what happens if they go bankrupt? You stand in line at the bankruptcy court. There's a saying in crypto that says, not your keys, not your coins.
This was getting thrown around all over Twitter, not the fact that Gensler said, not your keys, not your coins. I think people don't understand that Gensler actually taught a blockchain course at MIT before he went in to become the chair of the SEC. Is there not a link there? Is that not significant? So he acts dumb, making sure everybody's well aware that he's not referring to a steak that you eat when he's talking about steak. But he's not. You know, he knows what he's doing. So did the US putting him where they put him. So did the people that, you know, are behind him. They may act dumb to the public because they have to do that. It's all a big game, guys. You know, these guys are not as stupid as you think. Neither is the Federal Reserve, by the way. I've got news for you on that, guys. People think the Federal Reserve is stupid. I don't think they're stupid. And somebody will tell you that has probably, you know, got 100 coin in Litecoin, that the Fed is stupid. The Fed aren't stupid. They know exactly what they're doing, guys.
So those other platforms should take note of this and seek to come into compliance, do the proper disclosures and registration and the like.
Okay, so but here's one of the big issues, as I think you know, which is this staking service is going to no longer be available to customers in the U.S. But interestingly, they're going to still offer the same product internationally, abroad, outside of the United States. And so it raises this larger policy question as to whether crypto, these types of products just move offshore. Maybe that's what you want, and that's a good thing. But then whether what you do about the American citizenry who's then using VPNs and all sorts of other things to skirt around what's happening here.
Look, we're technology neutral at the SEC, but we're clearly very focused on investor protection. 330 million Americans are our clients. These firms, Kraken knew how to register. Others know how to register. It's just a form on our website. They can come in, talk to our talented people in disclosure review teams. And if they want to offer staking, we're neutral. Come in, register, because investors need that disclosure. What are you doing with the tokens? Are you trading against the tokens? Are you borrowing against the token? Are you using them for your own purposes? And we've seen this in the crypto field. So investors not only need that disclosure, but it's the law.
Amen. I never thought I'd say that on the back end of Gary Gensler speaking. But, you know, I think he's right. I think he's got a point there. I'm not just one of these people that, just like with the markets, right? When I'm wrong, I'll say I'm wrong. And I'll hold my hands up and go, we got that wrong. Let's move on to let's move on from that. Because you focus on what you got wrong, you're going to miss out on getting something right. Gensler's got a point. Just because he works for the SEC and I'm, you know, largely against overreaching governments, totally against overreaching governments, in fact, what he said there was perfect. And then you can go, we can always argue about should they, you know, who put these guys in charge, blah, 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 blah. But he's right, you know, and Kraken potentially should have registered. If that's the law in the United States, it's like in the UK, I don't break laws because I don't want to go to prison. Okay? Not, you know, I don't have to respect the laws, but this is the thing. So, you know, we had this come out. That was just interesting. Hopefully that's given clarity on the entire situation. Let's talk about Bitcoin. Let's draw some key levels up. Of course, we actually expected a lot of volatility and a pullback. We called it a de-risking going into Tuesday's CPI. We don't know what the number's going to be. I'm going to be covering this in more detail with my patrons and actually looking at the intricacies that make up the CPI tomorrow. But I've got a bit of me feels like it's going to be slightly higher, or at least higher than expected. So 6.5 was last one. Forecasts are coming in at 6.3. The general consensus is 6.2. Lower CPI, good. You know, it's all everything soft landing narrative back on the cards. That's where we're going. Higher CPI, we need to rethink where markets are at. And really, have markets got rates correct is my big question that I'm asking myself, because I'm not so sure. This is from Pepperstone, which is Chris Weston's, great guy to follow on Twitter, by the way, guys. Or I think he's a part of the company. And here they're laying out rates moving forwards. And we've looked at various things like the 2-year yield curves. I looked at it yesterday. I don't think I looked at it on YouTube, but I looked at it elsewhere, where we were looking at, you know, have we got rates right? And our market's pricing incorrect rates, because really they're only pricing in one more 25 basis points at this point. So there is the potential for the euro dollars is pricing in 5.1-ish. And of course, the 30-day Fed funds futures is a little bit lower. But that's a lot more of it's a 30-day Fed funds future. So if we went into the longer term time horizon, you can see that, you know, it's kind of there. But I will go into that in all detail. I don't want to bore people. So it's all about this event. You know, we've got some okay news. The UK narrowly avoids recession in back half of 2022 despite December slumps. And actually, you know, not only do we have the US CPI, we've got the UK CPI. This is the European Bank. Rates must reach a significantly restrictive level. We need to see that our policies are being transmitted to the economy. We'll keep rates high until we see a robust evidence that the underlying inflation returns to our target. All about inflation, guys, and this data is going to be critical and you need to be aware of it. I will update everyone again on tomorrow and look at it a bit more intricacy on YouTube and, of course, go into it in a lot more detail with my Patreons. Let's take a look at the Bitcoin chart. So we still think that there's a good chance. In fact, it's our base case that you're going to see more continuation on the back end of this. That's our base case for where we think crypto's going. We think this is going to set up for more continuation, okay? And we looked at this being a pullback. We looked at technically why you were potentially looking at a pullback from a head and shoulders point of view. And you'll say, okay, well, it didn't quite run. You know, TA is not an exact science. It doesn't need to come to the pound or the dollar. But if a structure's there, a structure's there. You know, you're looking at market participants at the end of the day, guys. And there's going to be slight wiggle room there. Not massive. If this was way out and you'd only got to like here and then that was it. But then, you know, if you'd got to here, we already had what we were calling the head and shoulders setting up here. And now you're setting up for a larger head and shoulders. So let's get rid of all this. Where are we going back to? Well, I want to use a fib. This is a retracement tool to mark out the whole of this move and to put some levels on. We don't really do fib analysis with you guys. We don't really do much in-depth technicals with you guys, to be honest with you. So we're not going to bother. Actually, you know what? We'll just go for the golden ratio, which should be 618. So we can get rid of that fib now. So these are your fib levels that you got to look for. Now, we did have levels. And I'll draw it in red because these are quite thick lines. And we'll get rid of this. We did have levels here, which is where you're currently at. So you'll see here and here we were looking at already. Because this is taking you back to this, what was a potential neckline here. Okay, so you've hit these two. Look for, here of course is the next one. And then this is your 50% move here. So this is the 50% of this move you would have retraced. So if you come down here, you've retraced 50% of the move to the upside. I wouldn't want to see Bitcoin go lower than $19,965. If I saw that, and actually where does that tie up? You'd still be within, and it could do something like this on the back end of the CPI. So maybe CPI goes out slightly higher. Markets panic a bit, but it's still, you know, it's not it's marginally higher, and you see something like this where you get this sharp stab down into it, and then you compress, and then you look for that upside. This is well within what we're looking for right now. So this is what I'm looking at moving forwards. This is the play for me, guys. Providing that we don't come much below this, you can put a toe below it and deviate back above it. Of course, you run this, your head and shoulders theory is out the window completely. But this is, and then if you get this, the good news about that is you're setting up for, and this is all scenario forecasting, guys. It's all dependent on data. You know, we're consistently analyzing the market practically every single day and looking at various data points and going, okay, are we right here? Are we wrong? Is there subject to change? Have we got anything unexpected coming around the corner that we've got to account for? Is data changing from what we already have? And whilst the data stays in the kind of line that we think it's already in or now in, we think that you're looking for continuation, and this is it. And this gives you a significantly confident, certainly once you break this, you know, I personally see Bitcoin coming back up to these levels, your 30 sort of K levels. And that would align with all the other bottoming structure or indicators, I will say, which, you know, there's a pinch of salt that should be taken with indicators. However, a bullish divergence on the RSI weekly In the same way, a bearish divergence on the RSI weekly should be taken seriously. We said that. We said that down here. We got a rally, then we got the FTX, and we said, look, actually, from the start of the year, and I did do daily TA videos right at the start of the year, guys. I stopped doing them because I didn't have much interest on Bitcoin. We were spot on. And from the 5th, from the 1st of the year, we took a non-bearish approach. And from the 5th down here, we actually discussed within my Patreon community buying crypto for the first time and the reasons why. Since then, and this is what I mean about bears are too overly confident. Bitcoin went up 40%. You got altcoins 100, 200, plus percent up. So that's all I've got for you in this video, guys. Hopefully you've enjoyed it. Me scenario forecasting what I think is going to happen for Bitcoin. Doesn't have to play out like this. This is just what you should look out for. And if it happens, expect this to happen, and so on and so forth. There's many, many scenarios. I do believe that Bitcoin has broken out of some sort of a falling wedge. It's broken out of this. This falling wedge is also present within the Bitcoin gold chart, within the Bitcoin NASDAQ chart, within the Bitcoin S&P chart. And there was another one that I can't remember off the top of my head. I think there's good reasoning for Bitcoin to see that continuation. And the second half of this that we've actually not spoken about is Zidala, which I'll maybe just cover in a bit more detail in tomorrow's video. But I want to give a bit of word of warning. Could be in for a period of dollar strength, like in ashy candles. One green candle is typically followed and is rarely a lone candle. It's rarely a lone ranger. It's usually followed up by another green, which means you could be in for a little bit more or a bit of a prolonged period of dollar strength. That's, of course, going into the CPI. Very interesting, guys. Lots of things you guys have to be aware of and look out for. Stay tuned to this channel because we'll keep you up to date on a daily basis. And if you want to see what I'm buying, where I'm buying it, a little bit more in depth about my own personal strategy, feel free to join my Patreon. If it's not for you, you can cancel at the end of the month. All I've got for you in this video, guys. See you in the next one.